Alright folks, gather round. Let's talk about something that affects almost every adult at some point in their lives: credit scores. Whether you're just starting out on your financial journey or you've been managing money for years, understanding credit scores is key to unlocking a lot of opportunities. Today we're diving into what a credit score actually is, why it matters, and how it can impact your everyday life. You might have seen your score pop up on a banking app or heard about it when applying for a loan, but what does it really mean? Think of your credit score as your financial report card, a simple 3-digit number, usually ranging from 300 to 850, that gives lenders a quick snapshot of how responsible you are with money. It's like a grade for your borrowing habits, showing how well you handle credit and pay back what you owe. Lenders, like banks and credit card companies, use this score to decide if they can trust you with their money. Since they don't know you personally, your credit score acts as your reputation in the financial world. The higher your score, the better. A strong credit score means you've shown you can manage credit responsibly, pay your bills on time, and keep your debts in check. This can lead to lower interest rates, higher credit limits, and more financial freedom. With a good credit score, you'll find it easier to get approved for loans, snag the best credit card offers, and even qualify for that dream apartment you've been eyeing. It can even affect things like getting a cell phone plan or setting up utilities. On the flip side, a low score can make life a bit more challenging. You might face higher interest rates, get denied for loans, or struggle to rent the place you want. Sometimes it can even impact job opportunities in certain industries. But don't stress, just like you can study to improve a grade, you can take steps to boost your credit score over time. It's not set in stone, and with some smart habits, you can see real progress. So how is your credit score actually calculated? Let's break down the main factors that go into it and see what you can do to make your score shine. So, how do credit bureaus actually come up with your credit score? It might seem mysterious, but there's a clear formula behind the number that lenders use to judge your financial trustworthiness. It all starts with your credit report, a detailed record of your credit cards, loans, and your payment history. This report is like your financial report card, and it's updated regularly with information from banks, credit card companies, and other lenders. Here's how the main factors break down. Payment history makes up 35% of your score. This is the single most important factor. Paying your bills on time every time shows lenders you're reliable. Even one missed payment can have a big impact, so setting reminders or using automatic payments can really help. Amounts owed counts for 30%. This looks at how much of your available credit you're using. Keeping your balances low, ideally under 30% of your total credit limit, shows you're not overextending yourself, which lenders like to see. Length of credit history is 15%. The longer you've had credit accounts open, the better. This shows you have experience managing credit over time, so don't rush to close your oldest accounts. Credit mix makes up 10%. Having a variety of credit types like credit cards, auto loans, and a mortgage demonstrates you can handle different kinds of credit responsibly. Finally, new credit is 10%. Opening several new accounts in a short time can make you look risky to lenders, so it's best to apply for new credit only when you really need it. All these factors together create your unique credit score. Why care about a good credit score? It's your VIP pass to the best financial products. A high score means lower interest rates on loans, saving you thousands over time. Landlords check scores before renting, and a good one shows you're responsible. You'll also get better credit card offers, lower insurance premiums, and even a leg up with some employers. Your credit score can open doors in more ways than you think. Now, what if your credit score is low? It can feel like hitting a brick wall. Getting approved for loans is tough, and if you do, interest rates are sky high. Renting an apartment becomes a challenge. Landlords may see you as a risk. A low score can also limit job prospects and make it harder to get utilities or require higher deposits. It's like carrying around a financial scarlet letter. But the good news, you can turn it around. Building a brighter financial future starts with understanding your credit. One of the most important steps you can take is to check your credit report regularly. You're entitled to a free report from each major bureau every year, so make it a habit to review all three. This gives you a clear picture of where you stand and helps you spot any issues early. Carefully review your credit report for any errors or unfamiliar accounts. Mistakes can happen, and even a small error can impact your score. If you notice anything that doesn't look right, dispute it as soon as possible. Taking action quickly can prevent bigger problems down the road and protect your financial reputation. Paying your bills on time is one of the best ways to boost your credit score. Even a single late payment can set you back, so set up reminders, use automatic payments, or mark your calendar, whatever works best for you. Consistency is key, and every on-time payment helps build your credit history. Keep your credit card balances low by aiming for less than 30% of your available credit. High balances can signal risk to lenders and lower your score. Try to pay off your cards in full each month or at least make more than the minimum payment. This not only helps your credit but also saves you money on interest. Be cautious about opening too many new accounts at once. Each application can cause a small dip in your score, and having too many new accounts can make you look risky to lenders. Only apply for credit when you truly need it, and focus on managing the accounts you already have responsibly. If you're feeling overwhelmed or unsure where to start, don't hesitate to reach out to a credit counseling agency. These professionals can help you create a plan, negotiate with creditors, and offer guidance tailored to your situation. You don't have to face financial challenges alone. Remember, improving your credit score is a journey, not a quick fix. Set realistic goals, track your progress, and celebrate small victories along the way. Every positive step you take brings you closer to financial freedom. With steady effort and smart habits, you'll see your score improve over time. Celebrate your progress, no matter how small, and stay motivated by focusing on your long-term goals. Progress matters more than perfection. Each step forward counts, and setbacks are just opportunities to learn and grow. Stay proactive by educating yourself, seeking advice when needed, and asking questions. The more you know, the more confident you'll feel managing your finances. Your financial future truly is in your hands. With the right mindset and actions, you can shape it for the better. So take charge, believe in yourself, and unlock the opportunities ahead. You've got this. Your brighter financial future starts today.